If you're thinking about buying a home, one of the most important steps is getting a home loan. That is, unless you're planning on paying all cash. In the next 90 seconds, we'll show you how a typical home loan process works. First, there's the lender, usually a bank, a credit union, a private mortgage lender, or a hard money lender. And then there's the loan processor and underwriter, who both works for the lender. The loan processor will want to see copies of your 2 most recent pay records and bank statements, plus 2 most recent years of tax filing records. If there's more than one borrower, then this applies to each person whose name is going to be on the loan. The lender will also want the borrower to fill out their loan application, listing all assets and debts. The lender mainly wants to make sure that the borrower, or borrowers, can make their monthly payment. After the lender reviews the documents, they come up with a formula called debt-to-income ratio, which simply is how much debt the borrower has going out, like credit cards and car payments or child support, compared to the money coming in, known as income. This ratio will determine if the borrower actually qualifies for the loan. If they do qualify using this ratio, then the lender will order a full credit report and, based on the good credit score, will issue a pre-approval letter, which is an important document to include in any offer you'll make on a home. A pre-approval letter shows the sellers that you have already started the loan process. Just as a side note, the higher your credit score, the easier the loan is to get, and it generally costs less. If you don't have a good credit score or need help selecting a good lender, just request our free guide at the end of this video for helpful tips. When you do find that perfect home and get your offer accepted, the loan processor then sends the loan package to the lender's underwriter, who reviews the process and gets the loan started, which from start to finish can take 25 days or more, depending on several factors, including the type of loan. The processor also orders the appraisal for the home, because the lender wants to make sure the value of the home is equal or greater than what you've actually offered to pay for it. If the appraisal is lower than your offer, then you'll either have to renegotiate the price with the seller or increase your down payment. If the home appraises at or above the offered price, then the loan process keeps moving forward. Now let's recap the steps to getting a loan. First, you'll need to have more income than debt. Next, you'll have to find a good lender with great rates. If you don't have one, we'll help you find one. You should have copies of your 2 most recent income statements and bank statements and your 2 most recent tax filings ready to give the lender. And be prepared to respond quickly to any lender requests, because this keeps the loan moving along smoothly. For your free copy of How to Get the Best Loan in Today's Market, email your request to jeff@yourstreetdreams.com or call 760-822-1020. Your Street Dreams is a local community service provider.